Hi, I am AIMAN.
Hi, I am ADELI.
Hi. I am Sarah.
Hi, I am RAHMAN.
Hi, I am AZHARI. And we are from Group 6. Our topic for this video is the advantages of international pricing strategies implementations to business, consumer, and government.
In this video, we will be looking into the study of international pricing strategies and the advantages of its implementation towards businesses, consumers, and government. Consumers see pricing as one of the most significant factors in deciding between different products and services. Therefore, having the understanding of the best prices to charge to maximize sales and profits is critical to outperform the competition. We will be highlighting key aspects of international pricing and the benefits that they will bring. By the end of this video, we hope that viewers are able to thoroughly understand international pricing strategies and the benefits that will be gained from its implementations.
So, what is pricing strategy? The term pricing strategy refers to all of the approaches used by a business owner to determine the best price to charge for a product or service. Pricing is regarded as one of the most key strategic roles for a business. When we look at the 4 Ps, the only one that brings revenue is pricing, which is the value associated to a product. This shows that pricing is an important part in the business industry. If we look into the consumer perspective, as a customer we usually seek for the best mix of price and quality. For instance, while making a purchase, a buyer may see various types of package discounts or attractively manipulated price tags. Eventually, they will select the one with best price and quality. As I mentioned earlier, pricing strategy is an important aspect of running a successful business. This is because, if the pricing plan fails, then the demand for the product or service will decrease and fail. For example, during the month of Ramadan, if more than 10 sellers sells murtabak, the demand for murtabak would be lower and the sellers will make less profits. Hence, we can see how an accurate pricing strategy is critical to the company's profit. For an example in technology, nowadays, when it comes to technological products such as the Apple iPhone, they frequently use a price skimming strategy during the first launch date. Then, once competitors launch competing products, such as the Samsung Galaxy, the price of the product reduces to maintain the product's competitive edge. As a result, price skimming can contribute in the development of a brand image based on quality. Furthermore, it can help to recuperate costs or expenses more rapidly, while simultaneously generating a better profit margin. Another example we can see is in terms of global oil pricing. Consider Petronas. When oil prices fall, the gap widens and downstream margins rise. Even if the selling price finally follows the movement of crude petroleum. Apart from influencing operational profitability, benchmark prices have an influence on the carrying value of Petronas assets, which is shown in the company's profit and loss statement. For example, the recent surge in oil prices is being driven by Russia's current invasion of Ukraine. In instance, raw 97 fuel costs RM3 per liter on December 30, 2021, but over RM4 on April 7, 2022. That was nearly an RM1 rise. This indicates that pricing strategy is a critical element of business success. Let's jump into the types of pricing strategy, shall we? There are many types of pricing strategy, such as cost-plus pricing, competition-based pricing, dynamic pricing, freemium pricing, premium pricing, penetration pricing, and more. In this video, I will be sharing 14 types of pricing strategies. The first strategy is cost-plus pricing, which also called as markup pricing. It is a pricing method in which a fixed amount is added to the cost of producing a single unit of a product. The resulting figure is the product's selling price. The second strategy is competition-based pricing. This strategy refers to the costs of products and services based on the prices charged by competitors. Any marketing plan including branding and development choices such as trying to target niches with low competition or developing new product to start competing with particular competitors, can be referred to as niche marketing. The third strategy is dynamic pricing. Dynamic pricing, also known as fixed costing, is a method of determining a product's or services cost that really is incredibly adaptable. Dynamic pricing enables a company selling items or services through the internet to change prices on the fly in order to meet customer expectations. The fourth strategy is freemium pricing, which is a pricing strategy used by businesses who want to provide customers with both free and paid services. The free options are usually the basic types of the service, while the paid options are the improved or premium versions. The fifth strategy is premium pricing. When companies want to charge higher prices for their products than their competitors, they will be using a premium pricing strategy because the prices are higher. The goal is to create the impression that the goods would have to have a profitable operation product. The business is wagering that the customer will not look into whether or not the product is of higher quality. The sixth strategy is penetration pricing. Penetration pricing is a pricing strategy for gaining market share quickly by offering a low initial price to entice customers to buy. This pricing strategy is commonly used by new market entrants. Predatory pricing is an advanced form of penetration pricing. The seventh strategy is skimming price. Price skimming is a pricing strategy in which a product's or service's price is initially set high and then gradually reduced as customers become more familiar with it. This method is aimed at early adopters rather than the general public. The eighth strategy is hourly pricing. Hourly pricing, also known as hourly billing, is simple. You are basically selling your time for money. For example, you are paid a set amount for each hour you make research. The ninth strategy is psychological pricing. The practice of trying to set prices down than a whole number is known as psychological pricing. The concept inside psychological pricing is that consumers would then interpret a slightly reduced price as a lower price than it actually is. The 10th strategy is bundle pricing. This is a marketing strategy in which a company groups several products into a single package and sells it for a single price rather than charging different prices for each item. As a result, a bundle is now considered a separate product. The 11th strategy is high-low pricing. High-low pricing, also known as high-low or skimming pricing, is a familiar sales pricing strategy in which a product or service is officially produced at a greater cost, after which progressively reduced in price and heavily discounted as demand falls. The 12th strategy is project-based pricing. A fixed pricing model that provides one fixed amount for a particular project is known as project-based pricing. When project requirements, specifications, and scope are clear, this model works best. This model bridges the gap between hourly and production-based pay. Next is value-based pricing. Value-based pricing is a method of adjusting the price of goods and services based on their perception worth instead of their historical price. The value-based pricing strategy is used to boost revenue by raising prices without affecting volume significantly. Then, the last pricing strategy is geographic pricing. Geographical pricing is the practice of adjusting the sale price of an item based on the buyer's location. The difference in the price is sometimes determined by the cost of shipping the product to the site. However, the difference could also be due to the amount of money that people in that area seem to be prepared to spend. Companies will try to maximize revenue in the markets where those who operate, and geographic pricing helps them to achieve that goal.
Now, let's move to the advantages of international pricing strategies implementations. To business, consumer and government. To business. The efficient pricing strategy puts costs at the bare minimum to make a little profit. The key to productive economy pricing system is to deliver a higher quantity of products and services at reduced costs. Large corporations like Nestlé are able to benefit from the low price strategy. Small businesses may have issues regarding this matter. Next is that business grows internationally and deal with people from places, which includes different types of currency and pricing rate. Businesses will be able to increase their profits by having sales and purchases flow internationally. Also, International pricing being implemented in the business allows international marketers to expand and explore the markets. Try to put ourselves as an international business marketer, and we will be able to see the advantages. Next, evaluate competitors' prices on the market. International pricing strategies are used to achieve a competitive advantage over competitors. A competitive pricing strategy prevents you from losing market share and consumers to competitors. After that, this can also be used to increase reputation and sales by increasing the number of customers, which then businesses will be able to determine whether to increase their prices or not. Success in one country can impact success in another. Increasing your company's reputation and profile in your market area.
Pricing any goods effectively. Providing full and precise estimations. Deciding on the conditions of sale. And selecting the payment method are all critical components of benefiting from international sales. Pricing is important for consumers since it determines the value of any product for both sellers and consumers. It is a measurable pricing point that tells its worth. Low-income consumers may be able to take advantage of lower prices. The government can also get benefit from pricing measures as well. This has to do with the country's residents' purchasing power. With sound pricing tactics, the country's purchasing power will rise, boosting GDP and lowering unemployment rates. The unemployment rate is the percentage of people that are unemployed. It is a lagging indicator, which means it rises or falls in response to economic events rather than anticipating them. It is likely to grow when the economy is in poor shape and jobs are scarce. Furthermore, these international pricing strategies can increase the government's tax revenue. Taxes are compulsory contributions imposed on individuals or corporations by a government entity, whether municipal, regional, or national. Finally, with those benefits, the country can be more sustainable in the long run. As we are approaching the end of the video, we hope you are now able to hold a grip on what is international pricing strategies. From what we have gathered throughout the video, the implementation of pricing strategies can bring multiple benefits to all businesses, consumers, and governments alike. Pricing is critical for global marketing success, as the markets nowadays are ever-changing. The global pricing task is a never-ending process, with new difficulties to tackle each and every single day. Therefore, this raises the necessity to develop strategies that are suitable for the particular markets that the companies are involved in. It is important to note that, in order to establish an international pricing strategy, practitioners will have to face multiple challenges. It will be difficult and time-consuming, as it requires careful planning. It is also important to remember that before opting for any of the strategies, we must assess and evaluate the unique marketing plan and the surrounding environment of the business. The companies will learn and succeed as a result of having effective pricing strategies. All in all, having knowledge about pricing strategies will garner numerous benefits for its practitioners, as long as they are done right. That is all from us, thank you.